Okay, so you know what really grabs your attention in crypto, right? It's got to be those big, bold numbers and BlockDAG.
Yeah.
They really just came out swinging, with a 500% bonus.
Absolutely.
I mean, come on, 500%. Anyways, you sent this to us. You're always on top of things. So we really appreciate that. So for this deep dive, our mission is going to be laser focused. Okay, we want to get behind the headlines and really figure out what BlockDAG is all about.
Right.
We're going to dissect the money flow and, of course, the whole story they're trying to spin.
Yeah.
So you make sense of it all.
Exactly. 500% is definitely eye-catching, but we need to go beyond that. We need to look at the foundation, the tech. The testnet launched the GHOSTDAG architecture.
Yeah.
That impressive $207 million presale.
Right.
And of course, what that huge bonus really means.
Okay, so let's break it down piece by piece.
Yeah.
Let's start with the technical stuff.
Yeah.
BlockDAG is making a big deal about their testnet launch.
Sure.
Now, for those who aren't fluent in crypto, a testnet is basically a trial run.
Right.
A sandbox where they can tinker and see if everything works before they go live to the public.
Yeah.
And they're using this GHOSTDAG architecture.
Yeah.
It sounds very complex, but the core idea, as I understand it, is all about doing things simultaneously, like processing transactions, all at the same time.
Right.
Think of it like upgrading a road from one lane to like 6 lanes. So,
multiple lanes.
Yeah. So you can have way more cars passing through at the same time,
right,
leading to faster speeds and just being able to handle so much more traffic.
Right.
And that's what they call scalability in the crypto world. They're also talking a lot about the adoption of their X1 Miner.
That's a great analogy for GHOSTDAG. Scalability is a huge challenge in crypto.
Yep.
The ability to handle more and more transactions as the network grows.
Right.
And this whole idea of parallel processing with GHOSTDAG, it's their way of addressing that.
Yeah.
The testnet is really crucial.
Yeah.
It puts those claims to the test. As for the X1 Miner and the 800,000 users they're claiming,
right,
that's a big number.
Yeah, it is.
It makes you wonder, is this genuine adoption? Are these real users actively using the network, or is it something else entirely?
Yeah, 800,000, that number definitely jumps out at you. And it makes you think about the economics of it all.
Right.
Especially with that massive $207 million pre-sale. And then you add the 500% bonus on top of that.
Yeah.
I mean, that pre-sale number alone shows there's a ton of early interest.
Absolutely.
But that 500% bonus, on the one hand, it's super attractive.
Of course.
Who wouldn't want 5 times more tokens for their money?
Yeah.
It's a huge draw for early investors. But on the other hand, you got to wonder what that means down the road.
Exactly.
In terms of inflation.
Right.
If you suddenly have all these bonus tokens flooding the market, could that devalue the tokens everyone else is holding?
That's the key question.
Yeah.
It really forces you to think about tokenomics.
Right.
The overall supply of the token and how it's distributed.
Exactly.
When we talk about tokenomics, we're looking at the core economics of the cryptocurrency itself.
Right. And that brings us to the narrative. The story that BlockDAG is weaving to differentiate themselves in this super crowded crypto market.
Yeah.
They're basically saying they're going up against the big guys, like Ethereum and Solana.
Right.
Now, for those who aren't familiar with the jargon, Layer 1 refers to the foundation, the base layer of a blockchain network.
Exactly.
So BlockDAG is essentially claiming they can do what those established players are doing, but faster and better. And for potential investors.
Yeah.
The story they're selling is one of early adoption. You get in early with this massive bonus, and you could potentially reap huge rewards.
Yeah.
As BlockDAG disrupts the whole scene.
A compelling narrative is essential in crypto.
It's how you attract users and investors.
Right.
And going up against giants like Ethereum and Solana, that's a bold move.
It is.
The promise of a faster, more scalable solution, especially if GHOSTDAG lives up to the hype.
Right.
It could really resonate with people who are looking for the next big thing in blockchain technology. The potential hero's journey for investors.
Yeah.
As you put it, hinges on whether BlockDAG can deliver on this disruption and capture a sizable chunk of the market.
Okay, so we've laid out the basics. Now let's get to the juicy stuff. Let's talk about the questions that immediately come to mind, like that 800,000 X1 Miner user number.
Yeah.
It sounds huge. but how much of that is real organic interest?
That's the million-dollar question.
Yeah.
Could a big chunk of those users be bots?
Right.
Or people just gaming the system to get those early rewards without any real intention of sticking around? What information would give us more confidence?
That these are legitimate, engaged users.
Yeah, that's a great question. And
in crypto, big numbers don't always equal real adoption.
Right.
It's quite possible that some of those 800,000 are just automated accounts, bots, you know, or people creating multiple accounts to farm rewards, maybe to get airdrops or something, to really separate the wheat from the chaff.
Yeah.
We need on-chain data, data that shows actual network usage. Things like the number of unique wallet addresses, the volume of transactions from these miners, and even their geographic distribution to see if it's spread out or concentrated in just a few places. Metrics like their participation in the network's consensus mechanisms, if those are even in play at this stage, be much more convincing than just a simple user count. What's really fascinating is understanding the why behind the numbers.
Okay, and let's go back to that 500% bonus. We talked about inflation, but let's really dig into the long-term implications.
Okay.
What could happen to the token's value down the line? I can easily picture a scenario where early investors, the ones who got that huge bonus, might decide to sell off a big chunk of their tokens. Once any lockup periods expire, what kind of impact could that have on the price?
That's a valid concern.
Yeah.
A 500% bonus means a big part of the initial token supply is in the hands of people who got them super cheap. Once those vesting schedules or lockup periods are over, there's a strong incentive to cash in. They can sell their tokens and make a huge profit. This influx of tokens hitting the market could create a lot of selling pressure, potentially leading to a steep price drop, which would hurt anyone who bought in later at a higher price. The long-term success of such a large bonus relies on sustained demand from new users and real-world use cases that give the token value beyond the initial hype. History has shown that while high rewards can attract attention early on, they don't guarantee success in the long run.
Yeah, it's not just about the initial buzz, it's about what comes after.
Exactly.
Okay, now let's shift gears a bit and focus on the testnet. BlockDAG is making big claims about it being fast and secure. But what should we be looking for in reports about the testnet to really assess those claims? And I mean, you, specifically with your technical background, what are the key metrics, the benchmarks that really matter?
So for a testnet to prove those claims of speed and security, we need to scrutinize a few key performance indicators. When it comes to speed, we'd look at things like transactions per second or TPS, how many transactions the network can handle each second. We'd also want to see the block finality time, how long it takes for a transaction to be considered final and irreversible. And the overall latency or delay in the network security is trickier to measure in a testnet. But we'd look for signs of rigorous testing. Have they tried to break it using known attack methods? How robust is their consensus mechanism? Are there any reports of vulnerabilities that they've found and fixed during testing? Ideally, there would be independent audits by reputable security firms looking at their code and the testnet's performance. The focus should be on real-world performance under pressure, not just theoretical limits. This raises another question, though. How transparent will BlockDAG be about their testnet results and the audits?
Okay, so this massive bonus, it almost sounds too good to be true. Does that raise any red flags from a regulatory perspective?
That's a crucial point. Given the current regulatory landscape, the way this bonus is structured and marketed, it could definitely catch the eye of regulators, like the SEC. If the bonus is seen as just an investment opportunity, where profits depend solely on the BlockDAG team's efforts, it could be classified as a security offering. Regulators might look at things like the level of decentralization in the project, any promises of future returns tied to the bonus, and the overall marketing language they use. BlockDAG needs to be clear and transparent about the bonus to avoid potential regulatory issues.
Okay, so from a purely technical standpoint, Does this GHOSTDAG protocol really give BlockDAG a significant edge over all the other layer 1 blockchains out there?
That's a good question.
Yeah, there's a ton of competition in this space.
There is.
What makes GHOSTDAG stand out?
The idea of parallel processing to improve scalability is not entirely new, but the way it's implemented in GHOSTDAG and how it fits into BlockDAG's overall architecture, that's what will determine its true advantage.
Okay.
Lots of other layer 1 projects, they're also working on scalability, using things like sharding or different consensus mechanisms. For GHOSTDAG to truly stand out, it needs to show significantly better performance. Higher throughput, lower fees, and comparable or better security compared to its rivals. And this needs to be proven in real-world tests on the testnet and eventually on the main network. The real challenge will be in the details of implementation and how they navigate the trade-offs between scalability, security, and decentralization. It's a classic dilemma in blockchain. What's fascinating to see is how these trade-offs are handled in practice.
Okay, so let's compare BlockDAG's approach to some big crypto incentives from the past. Think back to Ethereum's 2014 presale. 1 Bitcoin got you 2,000 Ether.
That was a legendary one.
Yeah. Those early investors, they made out like bandits.
They did.
Then you have Solana with their initial staking APY over 100%. That definitely generated a lot of excitement.
It did.
And of course you have platforms like Binance. They always have their launch pool rewards. So when we compare these examples to BlockDAG's 500% bonus, do we see any patterns emerging?
It's a great way to analyze this. Ethereum's 2014 presale, while it offered a huge discount, it was a massive gamble on a brand new technology with no guarantees. The payoff was enormous, but the risk was huge too. Solana's high staking APY, that was a strategy to get people involved early on to boost network security. But those super high APYs, they can also cause inflation if there's not enough user demand to balance it out. Binance launch pool rewards, they usually involve staking existing crypto assets, more established ones, to earn new tokens. It's seen as a less risky way to own interest and distribute new tokens. BlockDAG's 500% bonus, it's a much more aggressive approach, just in terms of the sheer size of the reward. One key pattern to watch for is whether these big early incentives lead to sustained organic growth driven by real-world use, or if they just create speculative bubbles that eventually burst projects with strong fundamentals and genuine adoption. They tend to do better in the long run, no matter how big the initial bonuses were. It highlights the importance of looking beyond the initial reward.
It's not just about the initial hook. It's about what happens after the hype dies down. Okay, let's talk strategy. They launch the testnet, and then boom. This 72-hour bonus offer pops up. Why do you think they timed it like that?
It's an interesting move. Why not offer the bonus before the testnet launch to build hype? What's the psychology behind this?
What are they trying to do?
Launching the testnet first, it creates this perception of progress, like they've actually built something tangible, which adds credibility. Then they follow it up with a limited time high reward bonus, creating urgency and FOMO.
Fear of missing out.
Exactly. That 72-hour window, it's artificial scarcity. It pushes people to make quick decisions, maybe before they've really done their research. By offering the bonus after the testnet launch, they can say, look, we have a working product. Well, it's in testing, but still. And now you can get in with this amazing bonus, but you got to act fast. It's classic marketing, designed to drive immediate action.
Okay, and what about this cinematic keynote marketing strategy?
It's definitely more polished than what we usually see in crypto.
It's like a mini movie almost.
It's a high production value presentation. It can be a powerful way to grab attention and build excitement. It lets them communicate their vision in a really engaging way. But whether it's truly innovative or just a distraction, it depends on what's behind the curtain. If the keynote is backed up by solid tech, a good testnet, a clear economic model, then it can be effective.
Okay.
But if it's all hype and empty promises, then it could be a way to hide weaknesses.
Right.
Investors need to look beyond the flash and focus on the substance.
Okay, that $207 million they raised in the pre-sale, that's serious money.
It is.
How do you think they'll use that money?
Yeah. Where will it go?
Will they focus on development marketing operations?
It's likely to be spread across those key areas. A big chunk will probably go to core development.
Right.
Building and maintaining the blockchain infrastructure, improving GHOSTDAG, supporting the X1 Miner ecosystem.
Right.
Marketing will definitely get a lot of funding too. Building brand awareness, attracting new users, growing the community.
Okay.
And then their operational costs.
Yes.
Salaries, infrastructure, legal fees.
Right.
Those all need to be covered. Investors should expect transparency about how these funds are used. Regular updates on development progress, marketing initiatives, operational milestones, ideally with some breakdown of budget allocation that builds trust and shows responsible management. A lack of transparency is a red flag.
Right.
It raises questions about accountability.
Okay, let's put on our thinking caps for a minute. And imagine how different people in the crypto community might be reacting to this BlockDAG announcement. What about the experienced crypto investors? The OGs, as they're called. You know, the ones who've seen it all.
Right. They've been through multiple cycles.
Yeah.
They've seen the ups and downs. What do they think when they see a 500% bonus offer?
Yeah, are they jumping for joy or are they a little more cautious?
The OGs, they tend to be cautious, skeptical. Even they've seen a lot of projects with big promises that didn't deliver. They focus on the fundamentals. The team, the real world use, and the long-term sustainability of it all. A 500% bonus might even be a warning sign for them.
Really?
Yeah.
Interesting.
It could suggest that a project needs to lure people in with big incentives instead of relying on its own strength.
So they're not just going to blindly jump in.
No, they're going to dig deep. They'll scrutinize the white paper, analyze the testnet performance, look for a solid long-term vision, something beyond the hype.
Okay, now what about newer retail investors? People who are relatively new to crypto.
Right.
They see a 500% bonus.
Yeah.
It probably looks incredibly tempting.
Of course.
What might their initial reaction be?
They're likely to be drawn in by that big number. 500% is hard to ignore.
Right.
It sounds like a quick way to make a lot of money.
Yeah.
But they might not fully grasp the risks.
Okay.
Things like the potential for inflation, the uncertainty around the long-term sustainability of the bonus, and whether the technology actually works as promised.
Yeah.
They might focus solely on the potential gains without doing enough research on the project, the team behind it, and the competition. They're also more susceptible to FOMO. Making impulsive decisions based on headlines without fully understanding the situation.
And finally, the institutional investors. The big players. Are they going to be swayed by a big bonus?
Yeah, institutional investors tend to be much more cautious.
Yeah.
They're data-driven. A big pre-sale number. It might show some market interest.
Yeah.
But they won't be convinced by a bonus alone. They care about long-term viability and scalability, a strong and experienced team, regulatory compliance, real-world adoption, and the potential to generate revenue. They'll be watching the testnet closely. Looking for independent audits and data to back up BlockDAG's claims. They're more likely to take a wait-and-see approach, observing the project's progress, the stability of the network, and its ability to attract real users before they even consider investing.
Okay, so we've covered a lot.
Yeah, we have.
Let's try to distill this down to some key takeaways and actionable insights for you, the listener. If you're thinking about investing in BlockDAG, based on this announcement and that 500% bonus, what's a quick risk-reward checklist you should go through?
All right, here's a quick checklist to consider. On the potential reward side, there's a chance for big early returns. If the project takes off and the token price goes up. It's also a chance to be an early adopter of a potentially groundbreaking technology. If GHOSTDAG delivers on its promises. But on the risk side, there's a high risk of inflation. that big bonus could dilute the value of tokens over time.
Right.
There's also a chance of a big price drop. If those early bonus recipients sell off a lot of their tokens after lockup periods expire, there's uncertainty around the long-term viability of the bonus structure and how it affects the ecosystem. You need to critically evaluate the testnet's performance and security. Don't just believe the hype. And there are potential regulatory risks too. That big bonus could be seen as an unregistered security offering. Don't forget about the competition. There are many other layer 1 blockchain platforms out there. And that 800,000 miner user number, it needs to be verified. We need to confirm that it represents genuine and active adoption.
So the bottom line is, don't just dive in head first because of a big bonus number.
Absolutely.
Do your own research. Look into the team, the tokenomics, and all the potential risks. Don't let that big number cloud your judgment.
That's a great checklist. Now, if you were a crypto educator, trying to help people understand announcements like this, what are 3 short, impactful insights? Okay,
like tweet-sized takeaways?
Yeah, exactly, like tweet-sized takeaways that you'd share with the community.
Okay, here are 3 quick tips. 1, a 500% crypto bonus is attention-grabbing. But don't stop there. Understand the tokenomics and the potential for inflation. Do your own research.
2 claims of fast and secure in crypto need proof. Look for verifiable testnet performance and independent audits. Don't just buy into the hype. 3 large early bonuses in crypto. They can lead to big selling pressure later on. Think about the long-term sustainability of the project, not just the initial potential gains.
Okay, those are great. And finally, what's one critical hard question that anyone serious about BlockDAG should ask? A question that gets to the heart of a potential concern or a missing piece of information that we've identified today.
Okay, this is a crucial one. I'd ask them to provide transparent and verifiable on-chain data that proves those 800,000 X1 Miner users are real and that they're actively using the network. And